Hello traders and welcome to another video review. Today is Wednesday, May 11th, 2022. Let's take a look at today's Forex calendar. Some data had been published overnight, and the most important data from the overnight Asian session was the CPI from China. As you can see, the CPI is increasing very strongly from 1.5% previous reading to 2.1%, the actual reading, which of course beats the expectations of 1.8%. PPI, almost the same situation. The previous reading was 8.3%. This time it was 8%, but it's still better than the forecast of 7.8%. So the inflationary pressure in China, as everywhere in the world, is increasing. During the London session, we got the CPI and caramelized CPI from Germany in line with the expectations, 0.8% and 0.7%. We are waiting for the European Commission economic forecast. This event is scheduled for release at 11 a.m. The main event of today's New York session is Consumer Price Index and Core Consumer Price Index. The market participants expect the Consumer Price Index to drop from 1.2% to 0.2%. It is very unlikely that after the Chinese data that beats the expectations big time, this kind of a drop in Consumer Price Index could happen. So please prepare for the surprise. My take on this situation is that there will be an upside surprise and will be way bigger than 1.2% previous reading, but I might be wrong. We will see what is the actual consumer price index. Crude oil inventories scheduled for release at 4:30 today, and then we got at the end of the day we got at 6 o'clock FOMC member Raphael Bostic's speeches, who will join the list of the speakers from the yesterday, and because yesterday evening plenty of the FOMC member gave us a speech. Because of the consumer price index, we should take a look at the SP500, and definitely we will take a look at the US dollar to Japanese yen, and then of course we will take a look at Aussie and New Zealand dollar because of the Chinese data. So let's start with S&P 500 index. Daily time frame chart of the S&P 500 index is showing us another wave of the weakness and the new local low at the level of 3,957, which is in line with our scenario, showing 5 ways down towards the level of 3,927. So this level has been almost hit, and 3,950. 28, where is the 100% of the Fibonacci projection of the wave A measured from the top of the wave B. So this is a 1-to-1 or 100% Fibonacci geometry level. So there might be an end of the wave C. So the wave C is about to terminate around 3,928. We are just less than 30. Well, there is 28 points away from this level. So please keep an eye on this level. I expect some kind of a reaction on that level, maybe some bounce, maybe some kind of a relief rally. However, the biggest right now, the most important market resistance, the technical resistance, of course, for the market is seen between 4,312, 4,368, and the lower channel line. This is the strongest, the biggest technical resistance right now. And as you know, between these two technical resistances there is of course the supply zone. So let's just find out what is going on here when the market gets there, if the market gets there. So this is my zone, and I strongly recommend to keep an eye on this zone. On the other hand, we of course have some other technical resistances. As you can see, I'm changing the 4,137 to the technical resistance, and this zone here between 4,109 and 4,084 is now the technical resistance. The other one is the immediate one at 4014. So this one will act as a support for now, but we expect the market to drop a little bit in order to complete the wave 5 of the wave C. American dollar versus the Japanese yen. What is going on here? Well, it's very interesting that we can see a sign of a topping, sign of a topping, topping pattern here. Maybe soon enough we will get some kind of a distribution pattern as well, because of the momentum keeps dropping lower. So after this shooting star pattern here, we got the very low volatility day, and then as you can see right now, the spread is between 150.47 and 150.16, so it's not even it's 31 pips basically, all the spread. So for now, US dollar to Japanese yen is not doing much. It's not doing much. However, it looks like this market will be soon making some serious moves because of the situation, on the technical situation, multi divergence here, negative multi divergence between the market behavior and the RSI indicator. So please keep an eye on the US dollar to Japanese yen. We will monitor this chart daily, because it's very interesting how the situation will be played out by the market participants. As expected and as announced, Australian dollar to the American dollar. So what do we have here? All of these technical supports and technical resistance are no longer that much necessary, because we have made a completely new set of the technical resistances, and I think we should put them on the chart. So right now the key resistance is this one, the one that was the technical support, 6,992. So our target has been hit. Moreover, we got the new local low, 6,912. So this is the low that market was able to hit, and if of course this was made during the extremely oversold market conditions, and we got some sort of the bullish divergence, new lows here, new local highs here. So maybe it's time for a bounce. So let me just point out that this situation is very, very interesting as well. However, if we zoom out here, right, we can see that might not be the end of the drop, because we broke below the lows of 2020, first one, second 2020, now 2021. We are already way below these lows, and the next target is 6,778. So please bear in mind, this market is clearly bearish. This market is bearish, and bears are in charge of the Australian dollar. So what can happen here in terms of the bounce, right? So where is our target? There you go. This is our target, 200 pips lower. What can happen in terms of the retracement? Of course, we can retrace a little bit up. However, please notice the very, very obvious thing we got on this chart. Please follow me. Wave 1, wave 2, wave 3, wave 4, wave 5. So right now it might be a time for a bounce. It might be a time for this market to bounce higher, but this will be a corrective bounce. It won't be a new cycle. It won't be a new beginning. This is only a corrective bounce, and I guess that bounce would get us towards 7,168, 7,268. So this is the maximum level for the bounce. Let me just make some sort of a channel as well on this channel, because what I want to do is to connect the wave 2 and the wave 4 highs. So this is what I want to do, and expand them towards the wave 3. There you go. And as you can see, this is the Elliott wave channel technique, and this is perfect. This is perfect down move. and this is of course additional support for this market. So let me just copy this level and change the level to green. So this is a temporary technical support. The low is at 6,912, almost perfect. So ABC to the upside, is this the next move for this market? So shall we expect ABC to the upside? Let me just put some correct waves here, correct cycle, basically ABC to the upside on the wave, because it's to the upside. Let's keep it green. ABC to the upside. Next we will see, but I wouldn't be surprised to see ABC to the upside on the Australian dollar to US dollar. And let's take a look, of course, let's take a look at the Ethereum. At the end of our meeting, we got the 5 ways to the downside. Okay, that's fine, but we don't need it anymore. Let's zoom out first. Let's zoom out. We got ABC to the upside with the key level at 3,446, and now we just basically red waterfall keeps appearing on the Australian dollar. So what I want to show you today is that it's very likely that, due to the fact that the bears are still in charge of the market, the market broke below the key technical resistance level, and in the same time the key supply zone located between 2,906 and to $3,000. basically this is that zone. We can expect right now the market to go way lower than the current level. Now we are testing the lows of the wave B. It's broken already. Local low is 2,200, and today's looks like a down day. So the next support is located at the very important level, and this important level is the blue arrow 1,700, which is around 574 pips away from the current price. We have one more level which should be lifted a little bit. It's that low, and that low is 2,151. So let me just put the coordinate correctly, 2,151. There you go. This is the low, of course, of the wave A, and then this technical support is no longer relevant, and the next targets might be a little bit closer to 1,700. If you want to be more picky, then 1,750 is one of them. So this is that important zone here. Please keep an eye on this zone. We don't need any more of the Elliott wave count any longer. This is the technical resistance as well. Red line is necessary. So 2,151 next target, and then of course breakout lower and free fall towards 1,750, 1,700. Only a sustained breakout above 3,000 and break out of this channel, the big down channel, will give us some kind of temporary strength of the bulls. However, so far there is no indication of this down move termination or reversal, so the outlook remains bearish on Ethereum. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.